Do you have your retirement investments in mutual funds, ETFs, or bond funds in your retirement accounts like 401k, IRA, or pensions? Then this episode is a must for you to watch so that you get informed and prepared to adjust your investments if needed. Financial ignorance is very expensive. Hello, powerful people. Welcome to the More Money with Millen show. I'm Millen Livis, holistic financial independence mentor and the host of the show. I help people who struggle with money worries to become financially savvy and have more money with less stress and less risk so that they can become financially independent. Now, more than ever before, you've got to be financially savvy so that you can make better financial decisions. If you want to have a private money strategy call, never worry about money again, value $500, you can schedule it at speakwithmillen.com. No cost to you, it's on me, my gift to you. Okay, so let's dive into our topic today. Is your stock portfolio safe? And why you need to watch out for the CRE stands for commercial real estate fallout. Some of you may remember that 2008 market crash was primarily caused by the collapse of the residential real estate market, specifically due to the massive issuance of subprime mortgages and subsequent default of those mortgages by borrowers. That's when my new baby business crashed as well with the market. So I remember this very, very well. These defaults triggered a chain reaction throughout the financial system, causing widespread panic and eventually leading to a global recession. This time around, a possible recession will be caused by commercial real estate market fallout. When businesses shut down or downsize their operations due to the high inflation, the demand for commercial real estate, specifically office space, is declining. While the 2008 crisis was caused by the residential real estate market, the current risks are mainly associated with the commercial real estate sector, which has been heavily impacted by high cost of money, inflation, and limited access to financial to financing, right? Due to fallout of small regional banks. While the latest rate of inflation is slightly lower than in the previous months, it's still far long a way to go down to the 2% that Federal Reserve targets as a goal. A high inflation can cause a major fallout among regional banks, as we've witnessed recently with several regional banks, Silicon Valley Bank being one of them. Regional banks are typically more exposed to local economic conditions and industries, which makes them more vulnerable to the effects of inflation. National banks are larger and more diversified because they have operations across the country and even globally, right? Which can provide some insulation from regional economic volatility. Now, regional banks play a critical role in financing commercial real estate projects, particularly for small and medium businesses. When regional banks experience losses or defaults, this can have several impacts on the commercial real estate market. For example, let's talk about problems with regional banks. So most commercial real estate holdings are heavily leveraged. Losses or defaults among regional banks can lead to a reduction in the amount of money that regional banks have available to lend to commercial real estate projects. By the way, CRE stands for commercial real estate. Okay, another problem that we face due to regional banks' vulnerability is that banks already have tightened their credit standards in response to losses or defaults, making it even more difficult for individuals and businesses to qualify for loans. This also causes a slowdown in the commercial real estate market, as businesses are unable to secure the financing that they need to sustain or expand their existing operations. All right, moving on to the problem number 3, which is increased lending interest rate. Losses or defaults among regional banks can also lead to increase in interest rates for commercial real estate loans as banks try to mitigate their risk, which is understandable. This can make it even more expensive for businesses to borrow money, which can result in slowdown in the commercial real estate market even further. And the last one, as we discussed, is potential issues with regional banks fallout. When banks experience losses or defaults, they may be forced to write down the value of their assets, including their commercial real estate loans. And this can result in a decline in the value of these loans on the bank's balance sheet, which can impact their profitability and the ability to lend in the future. So all of these factors related to instability among regional banks can contribute to slow down in commercial real estate market as businesses are less able to secure the financing that they need and have to deal with higher interest rates. So why would you care about the potential commercial real estate fallout today and how it relates to your stock market investments via mutual funds or exchange traded funds or municipal funds, etc.? Here's why. Commercial real estate fallout can trigger a recession and overall financial fallout because it plays a crucial role in the economy. The commercial real estate market is closely tied to many other sectors of the economy. A significant downturn in the commercial real estate have several damaging economic effects. So let's go over them. First, job losses, right? The commercial real estate market provides jobs for construction workers, architects, engineers, property managers, and other professionals. These job losses can result in the reduction of consumer spending and further slow down the economy. Next, the impact is a reduced consumer spending. When commercial properties like shopping malls, restaurants, and retail stores experience vacancies or closures, it can lead to a reduction in consumers' traffic and consumer spending in the surrounding area. This can result in a slowdown in the broader retail sector and future decrease in economic activity. So it's like a chain reaction, okay? So another effect is further credit tightening. Losses in the commercial real estate market can also lead to further credit tightening as banks become more cautious about lending money. This can have even further complications, right? Because it can make more difficult for businesses to secure the financing that they need. So as you can see, the commercial real estate market is closely tied to the broader economy, and a significant downturn in this market can have several negative effects. These effects can lead to a recession, job losses, reduced consumer spending, credit tightening, and can also impact your stock market investments, whether you invested in the stock market via mutual funds or exchange traded funds, ETFs, index funds, municipal funds, bond funds, etc., through your retirement accounts like 401k and IRA. Doesn't matter how you invest it, right? It can affect them. So let's talk about ways that you can protect your investments. So there are several ways you can protect your investments in mutual funds, exchange traded funds, bond funds, index funds against the potential fallout in commercial real estate. So let's go over them. First is diversification. One of the most effective ways to protect your investments against a downturn in commercial real estate is to diversify your investment portfolio. I keep saying this, how important, because it's so important to have a diversified portfolio. By investing in a variety of asset classes, such as value dividend paying stocks, precious metals like gold and silver, and residential real estate like REITs, residential real estate investment trust, because some people like to invest in real estate through REITs, not buying property because it's more available for them to invest. So make sure that it's residential real estate investment trust, REITs. And that way, when you diversify, you can spread your risk and reduce your exposure to any, excuse me, to any one market segment. All right, next is avoid concentration of your investments in commercial real estate funds, okay? If you are concerned about the impact of the commercial real estate downturn on your investments, on your investment portfolio, like I am, you may want to avoid investing in funds that are heavily focused on this commercial real estate sector, because it used to be like very popular sector to invest in because of the dividends that they pay. So just be mindful of this. Instead, consider diversifying your holdings across different sectors like technology, healthcare, commodities, and consumer goods. All right, moving along to number 3 way to protect your investments. Know what you're invested in and monitor your investments. If you are invested in the stock market via mutual funds, ETFs, exchange traded funds, index funds, or bond funds in your retirement accounts or pensions, know what assets these financial instruments exposed to, because many people have no idea what their mutual funds are investing in. And you can see it on your brokerage account, or you can ask your financial advisor, right? So if you work with a financial advisor, just ask questions about the specific assets that you are invested in right now. It's essential to keep a close eye on your investments and monitor your potential risks and red flags. So review the performance of your funds with your advisor and analyze the exposure to different sectors and asset classes, especially commercial real estate. Next way to protect your investments is to consider low-cost index funds or ETFs that are not related to commercial real estate. Low-cost index funds and ETFs, exchange-traded funds, are popular investment options that provide broad market exposure with minimum cost, right? These funds typically track benchmark indexes like S&P 500 and also provide exposure to diversified range of stocks across different sectors and industries. And finally, the fifth way to protect your investments: be a strategic investor. Stay invested for the long term. Strategic investing is a long-term strategy, and short-term fluctuations in the markets are to be expected. By staying invested for the long term, you can ride out market volatility and benefit from compounding effects of long-term growth. So here the summary of what I shared with you today. In order to reduce your risk and achieve your long-term investment goals, you've got to protect your investments against potential fallout in the commercial real estate market by creating a well-diversified portfolio, knowing what assets you are invested in, and monitoring your investments, and also staying invested for the long term. That would do it for today. And I realized that it may feel a little bit heavy, a lot for you to process. So again, for a very limited time, I'm gifting you a Never Worry About Money Again session with me, value $500, at no cost to you, completely no cost, my gift to you. If this sounds like an amazing opportunity to you, which it is, go to speakwithmillen.com now while it's available. Remember, financial ignorance is very expensive. Ask me how I know that. Have a fantastic week and join me for the next episode of the More Money with Millen show next Wednesday to your health, wealth, and freedom.